Don't be fooled by this, because we're certainly not out of the woods yet. It's Wednesday, the 26th of February, and Bitcoin has had a bit of a recovery from the massive pull down. Now, we are not out of the woods yet. If you can see, we've seen that it's passed both our areas of control, and this little pocket that we see here between these two levels is an area of extreme low trading volume. Where Bitcoin is sitting at this present moment, right there underneath this level of resistance, is not fantastic. Bitcoin needs to recover back above the quarterly open for things to really stabilize. Where we are right now, and this little wick that we've seen where it's a bit of a recovery, that wick usually means that the bears that were leveraged shorting the market have taken profits. This doesn't mean the recovery. This doesn't mean the bulls are in control. This doesn't mean the sentiment in the market is back for this to move back up. I really do think that this area here at the 83,000 level, where I described it previously, where there's levels of fair value gaps, 3 of them, where the 0.5 Fibonacci level hits, and there is an area of CME gap, is the area where ultimate control is going to be. I also see this 200-day MA coming to support the area of a level of confluence, and I really do think there's one more level down. The week graph also gives me that understanding, because we are now settling underneath the 21-day EMA, but right within the level of the box that I drew many moons ago. You see the area of confluence that we have in that aspect. This needs to recover above it, or to be honest, recover above the 93,000. Now, what I will say, where it's sitting is relatively good. This area is the last level of support that it needs to hold. If this breaks and goes down further, the 83,000 is almost a certain factor that this thing is going to go down to. I would say factors of the PCE report coming out on Friday and the factors that the Donald Trump's tariffs will be coming in next week may give the understanding that this thing looks like it could push back down again. Don't forget, this could go all the way up to the 93 level and flush back down. That's not out of the realm of understanding as well. My main area of worry, where that understanding is coming from, is the SPX is really losing levels. The levels that it's losing are not good, especially as Nvidia's earning reports are coming out today, and various issues with Tesla and all of the Magnificent Seven that's coming out, where the earnings are not as strong as it is. This here is not very good. But I think this has another issue, and I will bring that in the video next, so make sure you follow. It's very important. If you look at the Bitcoin dominance, where it is right now, it's finding support on the 21-day EMA, which isn't great, which could mean a further continuation up, which would affect the altcoins not in the best possible way. We will see a bit of a retracement on that. But to be honest, where it is right now, there's no real clear direction of where this is going to go. This is in essence no man's land. If this holds support, we have got to have more downside on alts. If this goes down, then we will have a larger level of growth in altcoins. If you look at USDT dominance, it doesn't look good. I mean, yeah, don't get me wrong. This little area here has seen a bit of a reinvestment into crypto, and that can be seen by the growth of all altcoins and Bitcoin coming back and retracing back. But again, that could also be the bears taking profit. This doesn't look good. It's still sitting at the area at the top of this large wick that we see here. Let's see if that can hold it as a level of resistance, but I don't know. I got a feeling that the 5.34% is where it's going to really land. We look at the total market cap, and it's looking more and more likely that this thing is going to go down to the 2.62 level. The where it's sitting at the moment underneath the 200-day EMA is not fantastic. If this can reclaim above the Monday low, so above here, and to be honest, above the 2.97, 2.98, then we will start to believe that this thing market is going to turn back over. But don't forget, this thing can go all the way up to the 3.1 trillion, and it looks like everything's going well, and then have a massive flush down. Again, don't forget, PCE report is coming. Trump tariffs are going into effect next week. These are not good things for the market, especially to a market that's hyper reactive to bad news. One level of hopium, and we're seeing it now in the markets a little bit, is that gold is starting to roll over. I stated this previously, and that rolling over, especially if it gets towards the monthly open around the 2,800, will bode really well for Bitcoin. And what we want in the DXY is also happening. We're seeing continuous lower highs and lower lows. We need this to continue and break this level here. The 105 level is going to be extremely key. Once that breaks, then that looks like there is going to be a ramping up of the fall of the dollar, which then the $103 mark, if it breaks that, we're in full-blown 2017 alt season and massive run up. This is what we're looking for. This is what I've stated, and a lot of people aren't really talking about this. So in conclusion, we have some areas where de-risking is going to happen. The PCE report is coming on Friday. People are expecting a very good reduction in inflation, but I don't know. Things are looking a bit iffy on that side. On the same note, we have major earnings, especially Nvidia's earnings, that they're looking for a 60% profit increase. Those are hard numbers to hit, but it is Nvidia, and they seem to do and know what they're doing. We also have the problem of the tariffs coming in next week, and we have unemployment data coming in, a whole lot of things that are going to cause a bit of de-risking in the market. But at this present moment, we've hit some very key levels, and Bitcoin is going back up, but to where, I'm not too sure, and I've given you the levels. It could very well reject off those levels, so be very careful. Make sure you don't leverage, and make sure you start to reevaluate. These moments now are the times that you reevaluate into projects that have utility, right? This is where it's going to be. Even meme coins that have utility, you go for those, because utility holds when these moments happen. If you look at all these projects that have utility, they are still holding the best out of all of them in relation to just meme coins. Anyway, I'm Alvarez, the 7-Figure Crypto Investor, and I'll catch you guys later. Peace.